Thanks so much for tuning into the Trade Setup. I'm Iyer. Good morning. The big breaking news that's come overnight is that JPMorgan is adding India to its emerging bond market index. What would the implications of such a move be? Let's get in Lakshmi Iyer from Kotak to talk about this. Lakshmi, great having you. Thanks for taking the time out. I know you're traveling, so appreciate this. What is your first reaction to this development?
Yeah, hi, morning, Neeraj. I think the first reaction is certainly that of, great joy, great satisfaction and relief that, a journey which was started maybe about over 3 years back, which is the first time when you saw, the fully automatic route, government bonds, being introduced. This was back in, I think, late 2020. And I think since then, the constant tapasya of getting towards this path, I think finally has been recognized, and I think it is definitely a very very big moment for India, and of course definitely for the bond markets and the currency markets.
Mm. The importance of this on an annual basis, Lakshmi, for some people who may not quite understand this, how critical would this be on an annual basis for India?
So I'll tell you, if you look at the pecking order, of this index, clearly China, Indonesia, even Malaysia, each of these countries actually have their bonds included in this particular index, which means if there is any asset allocator sitting outside of India or any outside region and wanting to buy the index uh, I'm talking about the fixed income side, they need not or they never had a necessity to own India because it was never part of the index. Now, with this inclusion, it would mean, of course, they can still decide if they want to be overweight, underweight, market weight, like they do in equities. But clearly, it warrants a deco, it warrants an allocation. And the immediate number, as we will come to know as it unravels, but broad math is suggesting that a one-time allocation of close to about 23 to 24 billion dollars of money could actually come into the Indian bond.
Okay. Lakshmi, in light of the fact that we are in the midst of a world which is seeing heightened yields, yesterday the 10-year in the US has crossed 4.5 as well. What does this mean, if anything, in the shorter term for the Indian yields as well? The normal course would be presumably that this would mean that yields would soften immediately, maybe as a snap reaction. But just wondering if there is an immediate impact to your mind in a world which is fraught with higher yields.
So, near term, I would say the euphoria was already building up. Yesterday, also at the market close, you would have seen the bond yields actually eased off by 5 to 6 basis points. I think there was some kind of, constant uh, clutter in the market or chatter in the market that something like this is going to happen. So, if you ask me, very near term impact, I think markets will definitely rejoice for a tad, but I think this, what I mentioned or discussed, is slightly more of a long drawn impact. So maybe 5 to 7 basis points of positive impact for this news definitely is a given. But I'm saying on a durable basis, I think bond markets will go back to focus on crude oil prices. And most importantly, as you rightly alluded to, the US Treasury yields, which are not showing any signs of cooling off yet.
One last question, Lakshmi, before we let you go. Just the global picture as it stands, because we've crossed that 4.5 mark on the US 10-year as well, post the Fed commentary, and it seems that higher for longer might be the mantra currently. What would it mean for yields at large and interest rates at large, even from an Indian perspective?
I couldn't hear you the last part, Neeraj, but yes, the higher for longer narrative, which is a slightly hawkish undertone, compared to the Fed outcome, which was on anticipated lines, is clearly the dote, and the antidote is the news today. So I think both of them will clearly a tug of war as far as the bond deals are concerned.
Yeah, no, I'm sorry. I didn't want you to comment on the short term because I understand you look at the long term. So I was just wondering, so just extending this question, if you can hear me, Lakshmi, I was just wondering, because in that higher for longer mantra, what does it mean for bond markets in general over the course of the next 3 to 6 months until the narrative changes, if it does?
Okay, so yeah, that clearly means that the expectation that the rate cuts will be accentuated, whether it's in the globe or even for that matter in India, where we are seeing visible signs of inflation cooling off, especially the headline with vegetable prices coming off. I think that will have to wait for a bit. So I think the elevated yield curve or the flat yield curve, and in the case of US, the inverted yield curve I think is here to stay at least for the next couple of quarters.
Got it. Lakshmi, thank you so much for taking the time. I really appreciate your time. Have a great weekend.
Thank you. You too. Bye.
Thank you. Well, that's the view from Lakshmi Iyer of Kotak on the inclusion or the proposed inclusion of India to the emerging market bond index at JPMorgan. Well, my glasses are turning foggy as well. Nothing to do with this inclusion, of course, but yeah, let me just get on with the trade setup. So, therefore, this is the big news, viewers. Remember this, and this is very important from a bond market perspective. Sure, some people would argue that we are event driven, and therefore, at times of in tough times, this might work as a negative sport too. But I think we go with the fact that India seems to be the shiner of a lot of eyes, and therefore, in that context, to get this move going and flows coming in deservedly so might actually augur well for the stability and the depth of the Indian bond markets as well. So, well, hopefully, all of this is constructive. We'll get to know over the course of time. Now, the global news flow, that whiff of positive news notwithstanding, it's not all that great per se. So the Dow, fell for the third day on a trot. It's lost multiple points now on the Treasury yields also reaching multi-year highs. Remember, the 10-year Treasury yield in the US has crossed the 4.5% mark as the bond route has extended. The emerging market stocks as a basket are set to erase all of the 2023 gains on the rate jitters. And even Indian markets, no matter how strong we are per se, should be mindful of what's happening here. So keep that in mind. Oil is rebounded too. It come off a little bit. It's rebounded as Russia has banned most fuel exports. In other news, of course, independently, Tesla's proposed, as per Reuters, building battery storage factory in India. This could be positive as well. But US markets were down. The 10-year yield has shot up. So that's the other part, 2% for the Dow, the S&P, and the Nasdaq. The 10-year yield is the other big one, above 4-point mark. Independent of what the GIFT Nifty says, I would strongly believe that the markets will start off lower. So what's the trade setup? I believe it's tough to see an immediate U-turn towards positivity, at least in the session today. The risk reward for now is still in the favor of trades on the downside, especially at the broader end of the spectrum. I'm so glad that we pointed out that what the quant indicators and the technical experts were saying, starting I think last Friday or Thursday, about just to be cautious that this is not the time to take leverage longs in any fashion. That has worked out beautifully. Credit to all those people who wrote to us and whose newsletters we follow. So I mean, frankly, I'm not the one who can give a market prediction, to be honest. Indian yields may be marginally lower due to the bond inclusion index and may impact sentiment a little bit relative to the rest of the world. But sentiment is weak. Well, Chris, who's otherwise very bullish, is also coming out and saying, he said in that interview with us, but the greed and fear note that has come out, which is in quote unquote Tavagaram, says that there is a possibility of the mid cap and the small cap indices seeing a further out or corrective move. He's done a bunch of changes to the model portfolio. Concord may get impacted negatively today due to going out of the greed and fear portfolio as well. So be mindful of all of that. HDFC Bank too has seen a bit of a shave off, so be mindful of that. By the way, speaking of HDFC Bank, just before we get to stock and news, it's had a rough few sessions. Goldman Sachs, I believe, on its note has said that they believe that quarter two will be the trough. Post that there could be upticks, but this I would urge that for a really long-term investor, yes, the valuations are in your favor. If you expect immediate gains, at least individual investors tell me that this might not be the best time, maybe sometime later. Very quickly to the stocks in focus today. Glenmark Pharma and Glenmark Life, the official announcement has come in post-market, so the market knew yesterday. The point is, despite the fact that the market knew of this transaction, the stock price told you a story that the stock got a bit hammered, and that tells you a thing or two about how infused the market might be, or the fact that there's a bit of uptick in the stock prices ahead of the transaction any which ways. It happens in transactions like these that some people have a whiff. There could be trades that could be happening. Not ideal, but happens. And my perspective is right now, trades that only tell you what could happen to the stock. I would suspect that while the transaction is very constructive, and ideally the stock should move, but yesterday during market hours, I think some bit of the news spilled over out as source-based news, and the stock reaction told you that the market wasn't probably that excited. So be mindful of that. ISEC, SEBI's issued administrative warning in relation to merchant banking operations, but ICICI Securities now effectively a derivative of what happens to ICICI Bank stock price. So be mindful of that. Reuters or Business Standard is saying that Canada-India tensions have stalled the plan to buy tech core unit for JSW Steel. Again, the stocks probably gotten corrected quite a bit in the last 2 or 3 sessions. So be mindful of that. Railways continues to be a theme. Remember, railway stocks have actually held out. You see, for example, Tata Wagons or some others, they've kind of held out. Be mindful of that. That seems to be a theme wherein money still seems to be flowing. But RVNL has news. Companies formed a JV with Tracks and Tars Infratech for construction of a 6-lane greenfield highway project. Project cost is 1271 crores. Idea Forge has received an order worth 58 crores. The company of that size, it's positive news, so be mindful of that. Suntech Realty has some positive news as well. IFC and Suntech Realty, a 750 crore JV to invest. IFC is a good notable partner to have, and therefore it could be construed positively for Suntech. So be mindful of that as well. Very quickly, if I missed out on something, we're just trying to see in terms of news. No, not really. Largely covered. IDFC First is going to raise some money via QIP, so be mindful of that as well. Net, slightly positive news for India on a given day. I would have suspected this would have been very, very positive for the equity sentiment as well. Likely could be today, but just the world markets are looking so shaky that maybe to err on the side of caution might be a better strategy. Thanks for tuning into the Trade Setup. Have a great day ahead.